The world of commercial real estate is trembling on the edge of an impending catastrophe, and the weight of this crisis is sending ripples of concern across financial landscapes. The very foundations of bustling office towers have been shaken as the pandemic spurred a remote work revolution. In a haunting twist, the once vibrant downtowns have become desolate specters, echoing with emptiness. The clock seems to tick louder for mid-sized cities, grappling with the fallout and struggling to find ways to mend their revenue shortfalls. The professor of real estate and finance, Stijn van Nieuwerburg, captures the unfolding disaster with vivid accuracy. It is a train wreck in slow motion. The urban doom loop casts its ominous shadow, a downward spiral that threatens to devour cities, businesses, and lives. The question looms large: can we halt this spiral before it's too late? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. A looming specter haunts the world of commercial real estate as economists issue warnings of an impending crisis that could transform thriving urban centers into haunting remnants of their former self. Office values, once soaring, have plunged 31% from their zenith in March 2022, painting a stark picture of the turmoil that's at hand. The relentless surge of remote work, triggered by the pandemic, has severed the once unbreakable bond between employees and their office cubicles. As the gleaming skyscrapers stood forsaken, city downtowns turned eerily quiet, grappling with a ghostly atmosphere. But it's the mid-sized cities that bear the brunt of this catastrophe, struggling to cushion the financial blow in the absence of diverse revenue streams. Stijn van Nieuwerburg, a real estate and finance authority, succinctly captures the unfolding tragedy with these poignant words. It is a train wreck in slow motion. The urban doom loop, a phrase attributed to Nieuwerburg, encapsulates the ominous cascade of events that threaten to unleash economic havoc. The corporate exodus from leased office spaces ignites a domino effect. Vacancy rates surge, causing landlords to grapple with the harsh reality of renting or selling empty buildings, often incurring staggering losses. The dire predicament leads to mortgage defaults, with regional banks forced to shoulder the burden of these unpaid debts. In a chilling turn, the once vibrant business districts transform into barren landscapes, eroding the retail fabric and precipitating a cascade of cascading consequences. As tax revenue dwindles, cities find themselves trapped in a downward spiral, their very essence fading away. This catastrophe hasn't gone unnoticed by financial watchdogs. The Federal Reserve, the guardian of the nation's financial stability, has sounded the alarm, flagging commercial real estate as a pivotal risk. The danger is underscored by the average delinquency rate of loans, currently hovering around 5%. However, this figure masks a bleaker reality for mid-sized cities like Charlotte, where delinquency rates reach a staggering 30%. A sense of urgency lingers in the air, even as the remnants of the 2021 American Rescue Plan offer temporary reprieve, momentarily postponing the full-throttle impact of the doom loop. As the clock ticks, the enormity of the impending catastrophe becomes starkly evident. The economy groans under the weight of over $5 trillion in commercial real estate debt, with a staggering $2.75 trillion in commercial mortgages set to mature within the next 6 years. Office buildings emerge as the immediate battleground, accounting for more than half of the $626 billion of at-risk debt slated to mature by the end of 2025. Yet, they are not alone in this struggle. Apartment buildings, laden with $192 billion in debt, face the urgency of refinancing by the same deadline. Regional banks, shouldering a significant portion of the commercial real estate debt, stand perilously exposed. The Federal Reserve, despite recognizing the imminent peril, remains committed to its course of raising interest rates. The series of 11 rate hikes since March last year, lifting the official rate to a range of 5.25% to 5.5%, casts a shadow over the market. The repercussions are felt as high interest rates slam the commercial property sector. Borrowers find themselves grappling with doubled or even tripled capital costs within a span of a year, precipitating a grim choice between holding on to properties with shrinking returns or halting payments altogether. The casualties are visible in the likes of Blackstone Inn, Brookfield Core, and Goldman Sachs Group Inn. Investors who have been forced to default or relinquish their holdings to lenders. The sobering truth emerges: those who cling desperately to weather the storm might ultimately suffer more substantial losses. The haunting saga of Warwick, once valued at a staggering $47 billion, stands as a dire omen of what lies ahead. This office space giant, once a pillar of commercial occupancy, now grapples with dwindling occupancy rates and skyrocketing rental costs. A seismic plummet in market value, from billions to mere millions, paints a chilling picture of the sector's fragility. Bankers shudder at the thought of a WeWork bankruptcy, realizing it could escalate the existing crisis to unthinkable proportions. Regional banks stand on the precipice, their vulnerabilities exposed by nervous investors, high interest rate risks, and the weakening commercial real estate market. Moody's Investor Services has already cast a somber tone by downgrading 10 regional banks and placing 6 more on alert. The imminent question becomes undeniable: are more bank failures inevitable? As commercial real estate emerges as a glaring financial precipice, economists' apprehensions ripple through every financial layer. The threat is more profound than the sum of its parts. It's an unraveling that could cascade into a broader economic crisis. With the shadow of colossal debt looming just a few years away and solutions obscured by uncertainty, the moment to fortify portfolios has arrived. Sheltering in the haven of precious metals might be the prudent step to protect hard-earned retirement funds. But as the world teeters on the brink of this financial abyss, one resounding question remains: how do we navigate a future defined by such a monumental and unpredictable downturn? Your thoughts are invited. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.